It's time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
Right. So I'm happy to do that because, as Ryan said, Adobe is a company that we follow quite closely. We've been doing a lot of tech research, companies that are good, solid, recurring revenue businesses, SaaS model businesses that have come off in many cases 50, 60, 70, 80%. We're looking at these names for potential entry points. But on to the Your Stock, Our Take. Adobe Inc. Trades under the symbol ADBE on the NASDAQ. It's at a share price of $280 and a market cap of about 130 billion. So Adobe is an extremely well-known company, a subscription software for content creation, document management, and digital marketing. They have a wide range of products, way too many for me to mention, but three of the top ones are Adobe Photoshop, Adobe Illustrator, and Adobe InDesign. So Adobe was one of the top performing stocks in the tech sector up until the sector peaked in 2021. So if you look at this company over the past 10 years, it's up 23 times. The share price is up 23 times. Since it's hit a peak, however, in November of 2021, the stock price has declined 60%. And it's actually dropped about 30% just over the last couple of weeks after they announced that they would acquire Figma, a leading web-first collaborative design platform for approximately $20 billion, about half stock, about half cash. So what's going on with the company right now? Why all the negative momentum? Let's take a look at the recent financial performance. So at face value, recent financial performance was relatively good, about 13% growth in total revenue in the most recent quarter, Q3, up to 4.4 billion, about 13% as well growth in subscription revenue. So subscription revenue is about 90% of total revenue. And that's one of the great things about Adobe is that it does have that subscription model. Operating income, on the other hand, up about 3%, so basically flat. Operating margin was down slightly to 33.5% from 36.6%. And then earnings per share down about 5%. Historically, the company has had a tremendous track record of financial success, 7 consecutive years of revenue growth, growth averaging over this period about 20% annually. And the company grew the revenue by 23% in 2021 last year. And if you look at analyst expectations, they do expect some growth to continue over the next year. Analysts are expecting about $13.60 per share in earnings for 2020 for the current fiscal year. So that's up about 9%. And then going to next fiscal year, analysts are expecting 15% growth to about $15.60 per share is the consensus. So right now, based on current year's expected earnings, Adobe's trading at a valuation of 22 times. Price to earnings valuation of 22 times. So this is very cheap compared to the company's historical range. When it peaked in November, the company was trading at a valuation of about 65 to 70 times its trailing earnings per share. But if we look back over, say, the past 5 years or so, it's averaged up around, I'd say the 40 to 50 times range. So at about 20 times current expected earnings, it's looking very cheap. So the recent news, which led to the 30% decline in the share price, is, of course, the acquisition, $20 billion acquisition of Figma. This was not received positively by the market. According to Adobe, Figma has a addressable market of about 16 billion by 2025. Companies expected to add about more than 400 million in annual recurring revenue as they exit 2022. Gross margins of Figma were about 90%, and operating cash flow was positive. No mention about profitability. The company did say that they expect the acquisition to close in 2023 and that they expect the transaction to be accretive to Adobe's non-GAAP earnings per share by the end of year 3. So not immediately accretive, but by the end of year 3, they expect it to be accretive. And, this is somewhat of an issue I find myself when the growth expectation or the profitability expectation is several years out, because you really don't know what's going to happen 2 to 3 years from now, right? So it's when you're making an acquisition that's not going to be, fairly immediately accretive or accretive within the first year, there's certainly an element of risk that introduces. So what is our take on Adobe? Well, let's look at the pros and the cons. Adobe has very strong competitive advantages. It has the proverbial competitive moat. So where they dominate, like in Photoshop, Illustrator, Adobe Acrobat, they have very strong competitive positions there. Now, it's a recurring revenue business. It has that SaaS model. These types of companies are generally preferred in the market because there's more stable, more predictable revenue streams. We like that. High margins. It's a highly profitable business. Analysts do expect the company to continue to grow its earnings per share over the next year. And of course, that valuation, very cheap right now relative to the historical range. But what are the cons? Well, one of the cons is that the growth is slowing. So Adobe really benefited from the pandemic boom. So everything digital, almost anything digital, there was a huge spike in demand during the pandemic, and certainly in the content creation space. And so Adobe benefited from that. They produced a lot of growth. Now we're certainly seeing that growth slowing as we come out of the pandemic. And there's also the recession fears and investor concerns about how the company would fare during a recession. We've seen some margin compression. And then there's the acquisition of Figma. So what do we have here? So Figma, based on the acquisition price and the company's expected exit annual recurring revenue for the current year, they're basically paying 50 times sales for Figma. So this is a very high acquisition price, very high valuation price. It's really reminiscent of the peak valuations that we saw late last year in the tech sector and the software sector. And we've seen what's happened to those valuations since then. We thought they were too high. And then when the market eventually figured that out, stock prices have absolutely crashed in that area. So I think that there's a lot of smoke right now with the Figma acquisition. It may be a good move for the company to make long term. I know they've been very active with acquisitions over the past couple of years. One of the strategies is, like, rather than compete with some of these companies, why not just buy them out? But certainly there's a lot of smoke right now with this acquisition. The market did not like it. So it'd be good to see some of that smoke clear. And of course, there's very negative share price momentum. Part of that was due to the acquisition. Part of it is just due to some of the concerns generally in the software sector right now in the US. But it's really a situation where we don't see any major hurry for somebody to rush in with a full position when we see the stock essentially making 52-week lows quite repeatedly here. So what is our conclusion on the company? Well, ultimately, Adobe is a very fundamentally strong company. Excellent track record, great balance sheet, cash-rich balance sheet. So fundamentally, financially, it's a great stock. It does appear to offer an attractive investment opportunity long-term. So if you're looking for this as a long-term investment, to take some money, put it into a beaten down technology leader that has very strong market position in its areas, a lot of competitive advantages, then we do see an opportunity in Adobe. However, there are near-term risks, slowing growth, some smoke regarding the recent acquisition. There's that negative share price momentum. So there are some near-term risks that could further impact the company in the near term, and investors have to be prepared for that. For anybody who wants to build a position in Adobe, I do think that it's a great stock long term. But what we would say is you don't necessarily have to rush in with a full position. You can start small in this company, take a small position, and then look to gradually build that position size up over time as the company comes out with a few more quarters and we get some revised updates to the outlook. So that's all I have to say about Adobe. What do you guys think?